Let's start with the most common and called for question: is there a gift tax in Canada? Well, the short answer is no. Canada has no gift tax. But before you run to bring your checkbook, there are some very important things to consider that can prevent you from making costly and unnecessary mistakes. Hi, my name is Darius. If you are new to my channel, I focus on helping Canadians smartly invest their money, safely build wealth while paying fewer taxes. In this two-part mini-series, I will tell you what you need to do before gifting money or any other valuable assets to a family member, what are the most common mistakes and how to avoid them. So let's jump right in. Unlike the US, Canada has no gift tax. However, before gifting money or any other asset, there are tax implications and other things you need to be aware of depending on your particular situation and the type of asset you want to gift. In today's video, I will only talk about gifting money. If you are considering gifting other assets like stocks or real estate, I made a different video for that and you can find the link in the description below. If you are thinking about or already have gifted money, you should consider drafting a document called a deed of gift. You should know that it is not uncommon that a third party may question your gift and claim it wasn't intended to be one. Documenting your intentions through a deed of gift is a great way to avoid messy legal challenges. Let's clarify first what a deed of gift is, and then I will talk about three very common scenarios where it can be extremely useful to have one. A deed of gift simply documents the transfer of a property from one person to another and declares that it is a no strings attached gift to anyone you name with no stipulations or expectations of payback. Without a deed of gift, once property or cash is transferred, there may be lingering questions even after your death about how the assets were transferred, the kind of transaction involved, for example, a gift or a temporary loan, and even exactly who the assets were meant for. To get started on your first deed of gift, I linked an easy-to-use template in the description below. The first use of a deed of gift is to provide evidence of a gift parents give to help their kids get started in life. For example, buying a car, paying tuition, or simply meeting the costs of living independently. The deed of gift can help you protect the funds given. If an adult child is married, the deed of gift stipulates the funds and any gains on the funds are only for the adult child and not the married couple. This can help prevent their spouse from claiming that money is part of the family assets if there is a marriage breakdown. One important thing to be aware of: the benefits of a deed of gift do not extend to the direct purchase of or making a down payment towards a matrimonial home. When a couple divorces, a matrimonial home's value generally forms part of the common property of the couple. Regardless of how much each spouse put into the family home, the value of the family home is commonly split between the two. This supersedes any protection a deed of gift would give. This can result in a parent seeing their gift end up in the hands of their child's ex-partner. Despite this limitation, there are other ways around it. One method is to give cash or investments through a deed of gift and secure a line of credit using the assets as collateral. This way the assets remain protected. In Ontario, the value of gifts received by an individual is generally excluded from asset split during a divorce. The second use of a deed of gift is to ensure your children are treated equally and to prevent disagreements after you pass away. Let's look at the following scenario as an example. A parent pays for the post-grad tuition of one child, helps another child with a down payment of a house, and gives money to the third to start their own business. How do the previous financial contributions factor into the division of the estate? Were they unconditional gifts, early inheritances intended to come out of their future share, or were they informal loans that should be paid back when the kids have the money? If they were loans, should the loans be paid back to the estate? Documenting gifts of cash or property through a deed of gift can help simplify things. If the money was meant to be a gift and there was no expectation that the child would pay it back, creating a deed of gift and keeping it with your will can ensure that the kids are treated in accordance with the parents' wishes. If a child did not actually receive a gift from their parents and it was understood that the transferred money would eventually be paid back, documenting it properly with a declaration of trust or a loan agreement will help the executor of the estate calculate what is owed to the estate. The third common use of a deed of gift is when an elderly parent wants to have a joint bank account with their adult child to look after the financial affairs of their parent. Unfortunately, when the parent dies, the child may not be automatically entitled to use the funds. The assets in the account can sometimes be added to the estate of the deceased parent unless the child can demonstrate that the assets were meant for them. A deed of gift can help smooth this problem. It can be evidence of the parent's intention that their adult child is meant to have the funds after the parent passes away. That's it for today's video. I hope you found it valuable. If you want to create your first deed of gift, I added a link to a template you can use in the description below. Also, if you haven't done that already, make sure to hit the like button. And if you want to see more, don't forget to subscribe. If you have any questions or comments, please let me know below. I read and reply to every single one. So thank you very much for watching, and I will see you next time.